In a recent interview with General Motors CEO Mary Barra, Mad Money host Jim Cramer was stunned by GM's new partnership to add an astounding 2,000 electric vehicle charging stalls in the United States. The company plans to work with EVGo to install the chargers at 500 Pilot Company and Flying J locations, which currently operate as truck stops and gas stations. Now, this is a great initiative for GM to expand the charging network for its vehicles and confirm the company's long-term commitment to EVs, despite just selling 457 electric vehicles in the first quarter of this year. Although it appears as though General Motors is announcing one new entire charging station for every single new electric vehicle they delivered in the quarter, GM's EV sales were actually down 95% year over year due to a global recall on their Chevy Bolt, which contained defective batteries and posed a fire risk. But this is temporary, and GM believes that its sales will once again return now that the Bolt is back in production. So far, this has been a major setback for General Motors and Mary Barra, who believes that by mid-decade, GM will be selling more electric vehicles in the US than anyone else, including Tesla. This will be a tough bar to exceed, given that in the first quarter of this year, 3 out of every 4 cars sold in the US were Teslas, and GM was nowhere to be seen in the set of top-selling automakers due to the company's struggles. And so if we circle back and have a closer look at this 2,000 charger announcement that GM has set forth, things may not end up being exactly as the hype is leading buyers and investors to believe. For one thing, these new charging stations will be owned, operated, and maintained by EVGo, not General Motors. It seems that GM wants an arm's-length relationship with the build-out of this charging network. GM will be integrating a feature for preferred charging station bookings into their app in the future, and the company says that owners will get a discount on charging. First off, scheduling a time to charge up your car is likely not the desired future that most people want. Charging when needed on demand is more important than preferred scheduling. And to add some more context, this comes at a time when Tesla is planning to open all of its chargers to any type of third-party EV, and they have the largest charging network in the world. Since Tesla owns their chargers, they will benefit in a number of ways, including being able to earn income not just from Tesla vehicles, but any type of vehicle. And they get to set the prices based on vehicle type and time of day. Of course, this will increase throughput and therefore revenue at their stations, but by offering off-peak discounts, Tesla will be able to spread out the demand for charging throughout all hours of the day and fill in gaps at night, for instance, when charging demand is typically lower. Having strong utilization means that Tesla stations will be highly profitable and dynamic, as well as very much sustainable over time. General Motors' new chargers are also available to anyone. However, EVGo will be the one getting the future proceeds from this initiative. Given that over the next decade or so, the number of electric cars will massively increase, thus driving higher the demand for charging stations, it's shocking, but it appears that GM doesn't want a direct part of this recurring revenue type business. However, General Motors is reportedly helping to foot the bill for these 2,000 new chargers as part of its broader $750 million effort to build out an accessible charging network. These will be 350 kilowatt fast chargers, which GM desperately needs to bolster its lack of EV infrastructure. The company is recognizing something that Tesla chief Elon Musk has said multiple times in the past, which is that along with service centers, charging stations are one of the 2 most important factors for consumers considering a new electric vehicle. GM CEO Mary Barra stated, "We are committed to an all-electric, zero-emissions future, and ensuring that the right charging infrastructure is in place is a key piece of the puzzle." So although GM won't be earning regular income from new charging stations, it could help boost sales of its upcoming EV lineup. Of course, this doesn't come without taxpayer help, as this GM EVGo deal is expected to reap the benefits of government grants from the Biden administration. Back in June, a GM spokesperson stated that public funding is especially important for highway corridor charging given the challenging business case as the EV market continues to grow, which shows how GM continues to rely heavily on government handholding when it comes to electric vehicles. Now, it will still take some time for GM and EVGo to build out the electric charging stations for this new initiative. They expect a significant portion of these chargers to be installed and operating by the end of 2023. So they have a year and a half to get a significant portion of them ready. To put this into perspective, Tesla added over 2,000 chargers, more than GM's planned hyped-up initiative in the most recent quarter alone. And this isn't just a one-off thing, as Tesla has added over 2,000 superchargers in each of the last 5 quarters. So it's interesting to see that Mary Barra is coming on CNBC to talk to Jim Cramer, who is head over heels about adding these chargers, while Tesla quietly adds significantly more superchargers than this to its network every 3 months. And before I continue, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. Now, it's interesting, in this interview with Mary Barra and Jim Cramer, he believes that GM is a leader in autonomous and in EVs, as demonstrated by this announcement. This echoes President Joe Biden's past statements saying that Mary led the auto industry into electric vehicles. However, usually leaders are not in second, third, or 20th place, and leadership isn't determined by future announcements, but rather in this case, actual sales of electric vehicles, for which GM has currently been completely derailed. In terms of autonomous, GM operates its own fleet of self-driving cars using its Cruise software. However, this requires pre-mapped roads, for which only a subset of the country's roads are mapped, and the vehicles also require expensive LiDAR units, which when translated to a consumer vehicle would drastically increase the cost. The LiDAR would also need to be integrated into the vehicles themselves, as opposed to being an unappealing add-on on the roof of the car. Not to mention that GM is once again up against Tesla, which has over 100,000 regular consumers using the state-of-the-art FSD beta software that isn't limited to predefined roads and doesn't require LiDAR. It's extremely difficult to say that GM is the leader here when their autonomous cars are currently out of reach for consumers to actually purchase. Moreover, GM CEO Mary Barra downplays the major issues that General Motors is having not only in the EV space, but also in their traditional gas car business. The company has 95,000 unfinished cars in inventory. It costs a lot of money to keep tens of thousands of cars just sitting there waiting for the remaining parts. Inventory is the bane of all retailers. Jim Cramer is also shocked to hear that GM sold an insane 484,000 cars in China in the second quarter. He thinks this is incredible. Cramer says, "We spend more time thinking about how many cars Elon Musk will make over the next 7 minutes than we care about 484,000 vehicles in China in the second quarter. I want to write that picture. This is a gigantic number of cars for a country that a lot of people feel is shut down." Mary Barra responds by talking about the strength of their brands and saying that they've been in China for over 25 years. However, everything is relative, and this may be masking some of the problems. This is actually the worst quarter GM has had in China since the pandemic in 2020, down 36% year over year. Their joint venture with SAIC Wuling, which includes their $5,000 EV, declined 29% to 279,000 units. It's also important to realize that not all cars are created equal. GM sells many of its $5,000 car, however, has to split the profits with other Chinese companies. Investment firm ARK Invest just put out a research paper showing that they expect the auto industry to grow units but decline in enterprise value. In the final quarter of last year, we saw Tesla make $2.3 billion selling a fraction of the cars that General Motors sells, who only made $1.7 billion. Tesla has demand over a year out in some cases and continues to sell cars in the $60,000 range while maintaining 30% gross margins. Not to mention that many of GM's cars sold are not EVs, so they risk losing this business if they can't transition fast enough over the next few years. And Cramer hits on this with a question for Mary Barra, asking if she is making a lot of money per EV. Mary Barra responds by saying, "We have said that as we get into mid-decade, we'll be 60% lower, though," and continues to say we don't talk about individual product line profitability, but then talks about battery costs falling by 60% to maintain margins. This is purposely confusing because there's no way that GM is profitable on any of its EVs. It's impossible, especially at such low volume. Even Tesla only started breaking even when they were making about 80,000 cars per quarter, and that was with their first generation factory. the entirety of GM could be on fire, and Mary Barra would say that everything is doing great. Things need to be put into perspective. If GM has a goal to surpass Tesla, then there should be some evidence that it is on the path to do so, but all the evidence points in the other direction. For instance, Cramer thinks that this charging network build-out is a big deal for the electric Hummer. However, GM sold just 99 Hummer EVs in the first quarter of this year. I continue to believe that the Hummer is a misstep for GM. It's a low-volume battery hog at a time when scaling is of the utmost importance in order to maintain market share and batteries are in short supply. Each Hummer EV is a 9,000-pound monstrosity and has 210 kilowatt-hours of battery capacity. By comparison, Tesla's Model 3 batteries are about a third the size, meaning that Tesla could put this battery equivalent into 3 cars for every Hummer EV, as they rapidly turn new buyers into loyal Tesla owners, causing GM and the rest of the auto industry's dominance to shrink. And finally, Cramer is confounded that given that GM has self-driving, they have this deal with EVGo for chargers, and they have strong demand. How is it that GM is trading at a 5 times multiple of earnings? But in reality, GM is far from a consumer self-driving vehicle that people can buy. They can't produce enough finished vehicles, even in their gas car business, while their EV sales have been lackluster, and the new charging partnership is a small drop in the bucket compared to their main competitor Tesla. Since EVGo will be handling all of the revenue that these chargers generate, from GM's perspective, its purpose is to increase demand, which is strange, since GM should be supply constrained right now and they don't need a demand boost. Or this could hint that GM's demand is in fact weak due to underinvestment in infrastructure. At the same time, earnings forecasts are not as bullish as Mary Barra is, with analyst estimates showing that GM is a declining asset as they've gone from $7.07 in earnings last year to an expected $6.93 this year, with analysts anticipating an even bigger drop in 2023 to $6.60. This is a negative growth rate, and if the future is all EVs, then GM certainly hasn't shown its execution capability here, with under 1% of its sales coming from electric vehicles in the first quarter. General Motors hasn't yet proved that it can navigate this highly competitive and surprisingly complex shift to EVs. Mary Barra cites a vast lineup of cars, including remaking the Hummer, Silverado, Blazer, and others into battery-powered cars, but this might not be enough to keep up with Tesla and other EV makers that have built efficient and optimized electric vehicles from the ground up. So what do you think that the build-out of this new charging stations for EVGo means for General Motors? And besides Elon Musk and Tesla, what should Mary Barra and GM focus on in order to increase their electric vehicle sales? Please hit the like button and subscribe. We would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.